Hey there, financial rock stars! Ready to take control of your money and build a future you're excited about? Investing is your ticket to the party, and ETFs are your VIP pass. Don't worry if you're new to this game. We're about to break it all down in a way that's easy to understand and even easier to get started with. Think of investing like building a house. You wouldn't just start throwing bricks together, right? You need a solid foundation. That's where ETFs come in. They're like the building blocks of a strong investment portfolio, helping you diversify your money and reduce risk. In this ultimate guide, we'll dive deep into the world of ETFs, exploring everything from what they are and how they work, to the different types available, and the risks involved. We'll even compare them to other investment options so you can make informed decisions about where to put your hard-earned cash. So, buckle up, grab your financial tool belt, and let's get this party started. Let's start with the basics. What exactly is an ETF? Imagine a basket filled with your favorite treats, maybe some crunchy chips, delicious cookies, and refreshing drinks. That basket is like an ETF, but instead of snacks, it holds a collection of different investments, like stocks or bonds. This basket of investments, or ETF, trades on stock exchanges just like individual stocks. That means you can buy and sell them easily throughout the trading day. Each ETF has its own unique mix of investments, allowing you to target specific sectors, industries, or investment strategies. Think of it like choosing a pizza. You can go for a classic pepperoni, a veggie-packed delight, or even a Hawaiian with pineapple, if you're into that sort of thing. ETFs offer that same level of choice and flexibility for your investment portfolio. So, whether you're a seasoned investor or just starting out, ETFs provide a simple and accessible way to diversify your investments and potentially grow your wealth over time. Now that you understand the what of ETFs, let's explore the how. ETFs work their magic through a mechanism called creation and redemption. Don't let the fancy terms intimidate you, it's actually pretty straightforward. Imagine a group of large investors like institutions or wealthy individuals. They approach an ETF provider with a basket of securities, stocks, bonds, etc., and say, hey, we want to create an ETF based on these assets. The ETF provider then issues shares of the ETF, which represent ownership in that underlying basket of securities. These shares are then listed and traded on stock exchanges, just like any other stock. When you buy an ETF share, you're essentially buying a tiny slice of that entire basket of investments. It's like buying a slice of pizza and getting a taste of all the toppings with just one bite. The creation and redemption process ensures that the ETF's price closely tracks the value of its underlying assets. This makes ETFs a transparent and efficient way to invest in a diversified portfolio of securities. One of the coolest things about ETFs is the sheer variety available. It's like walking into a giant supermarket of investments with aisles upon aisles of options to choose from. Let's explore some of the most popular ETF flavors. Stock ETFs. These ETFs track specific stock market indexes like the S&P 500 or the NASDAQ 100. They offer broad market exposure and are a great way to participate in the overall growth of the stock market. Bond ETFs. Looking for a fixed income fix? Bond ETFs invest in a variety of bonds, providing diversification and potential income streams. Sector ETFs. Want to bet on a specific industry like technology or healthcare? Sector ETFs allow you to target your investments and capitalize on growth opportunities within those sectors. International ETFs. Expand your investment horizons with international ETFs, which track markets outside of your home country. Commodity ETFs. From gold and silver to oil and natural gas, commodity ETFs provide exposure to raw materials and natural resources. These are just a few examples of the many ETF flavors available. With so many options to choose from, you can create an investment portfolio that aligns with your financial goals, risk tolerance, and investment timeline. Section 5. Navigating the ETF landscape. Understanding the risks. Investing always involves some level of risk, and ETFs are no exception. While they offer numerous benefits, it's crucial to understand the potential downsides before diving in headfirst. One risk to consider is market risk. Since ETFs track the performance of underlying assets, their value can fluctuate along with market movements. If the stock market takes a nosedive, your ETF investments could lose value as well. Another risk is sector or industry risk. If you invest heavily in a specific sector ETF like technology, your portfolio could be vulnerable to downturns in that particular industry. It's also important to be aware of liquidity risk. While most ETFs are highly liquid, meaning you can buy and sell them easily, some niche ETFs may have lower trading volumes, making it harder to exit your position quickly. Remember, investing is a marathon, not a sprint. By understanding the risks involved and diversifying your portfolio across different asset classes, you can potentially mitigate those risks and position yourself for long-term success. Section 6. The price of admission, ETF costs and fees. Like any good party, investing in ETFs comes with a price tag. But don't worry, it's usually not as expensive as you might think. One of the main costs associated with ETFs is the expense ratio. Think of the expense ratio as an annual fee charged by the ETF provider for managing the fund. It's expressed as a percentage of your investment. For example, if you invest $10,000 in an ETF with an expense ratio of 0.05%, you'll pay $5 per year in fees. Another potential cost is trading commissions. Some brokerage firms charge a fee every time you buy or sell an ETF. However, many brokers now offer commission-free ETF trading, so be sure to shop around for the best deals. While ETFs are generally considered low-cost investments compared to other options like mutual funds, it's essential to factor in these costs when evaluating your investment choices. Remember, even small fees can eat into your returns over time. Section 7. ETFs versus the rest, finding your perfect investment match. Now that you're well-versed in the world of ETFs, let's compare them to other popular investment options. Stocks. Investing in individual stocks can be exciting, but it also requires more research and carries higher risk. ETFs offer instant diversification and lower volatility compared to picking individual stocks. Bonds. Bonds can provide stability and income, but they typically offer lower returns than stocks. Bond ETFs allow you to access a diversified portfolio of bonds with lower investment minimums than buying individual bonds. Mutual funds. Mutual funds are similar to ETFs in that they pool money from multiple investors to invest in a diversified portfolio of securities. However, ETFs typically have lower expense ratios and offer more tax efficiency than mutual funds. Ultimately, the best investment choice for you depends on your individual financial goals, risk tolerance, and time horizon. ETFs offer a compelling combination of diversification, flexibility, and cost-effectiveness, making them a valuable tool for investors of all levels. Section 8. ETFs, your path to financial freedom. Congratulations, financial warriors, you've made it to the end of our ETF adventure. You're now equipped with the knowledge and confidence to navigate the exciting world of exchange-traded funds. Remember, ETFs are like the superheroes of the investment world, offering diversification, flexibility, and affordability. They're your secret weapon for building a strong and resilient investment portfolio that can help you achieve your financial dreams. As with any investment, it's crucial to do your research, understand the risks involved, and choose ETFs that align with your investment goals and risk tolerance. Consider consulting with a financial advisor if you need personalized guidance. Now go forth and invest wisely. Your future self will thank you for it. Kindly subscribe to our channel and share your thoughts in the comments. It's completely free and supports us in creating more content focused on financial education.